So we've talked a lot about adjusting entries. Now we're going to journalize and then post the adjusting entries to the T account, which is the unofficial form of the ledger. So there's several different types of adjusting entries. There are prepaid expenses, for example, prepaid insurance, prepaid rent, and office supplies. And there are accrued expenses, for example, wages payable. So remember, accrued just means something has accumulated but has not yet been recorded yet. In this case, accrued expenses. And when you're talking about wages payable, it would be wages expense and wages payable that would appear in the adjusting entry. Also know that wages payable is also called salaries payable, and the expense account would be salaries expense. Another type of adjusting entry, which we've already mentioned, is unearned revenues. And the classic example of that is subscription revenue. And then we'll learn how we need to record depreciation to show that some of our assets are slowly losing value over time as they get worn out. This would be like our buildings, our furniture, and our vehicles. And then finally, we've got accrued revenues. This is revenue that has been earned but not yet recorded. Again, remember, accrued means something is accumulated, in this case our revenue, but has not yet been recorded. So we're going to have separate videos for each of these. And the first one we're going to talk about are prepaid expenses. Prepaid expenses are just simply advance payment of expenses. And we've already talked about this before, such as prepaid rent. So if you're going to prepay for multiple months of rent, you need to increase an asset account called prepaid rent. Why using an asset account instead of rent expense? Because you are prepaying it for multiple months. You have not used it up, therefore it has a future value and should be an asset. And that asset is called prepaid rent. If you pay for multiple months of insurance ahead of time, then you need to increase an asset account called prepaid insurance. Why are we using an asset account instead of using insurance expense? Because when you're prepaying insurance, just like the rent, it has a future value and therefore it hasn't been used up and must be recorded as an expense called prepaid insurance. And then another common example are supplies. These are office supplies, like boxes of copier paper, toner, stuff like that. So because they are not going to be used up right away, they have a future value and then are going to be considered an asset, and the asset that we use is called office supplies. And then later, as we use up some of those office supplies, we need to update that account. So they're all recorded as an asset initially because they have a future value, which means they have not been used up yet. But over time, and for example, every month, every quarter, every year, we must show how much of those assets were used up. How do we do this? Well, let's consider prepaid rent. If you pay for 12 months of prepaid rent at the beginning of the year, each month you need to lower the prepaid rent account for 1 month of rent being used up. So you would lower it by the value of 1 month of the rent. And then you would also increase an expense account, in this case, rent expense. So let's get started with prepaid rent. And let's use an example like you'll be seeing on your homework and the tests. So it looks like we're paying rent ahead of time. On January 1st, XYZ company paid $3,000 for 3 months of rent. So how much is that per month? That's right, $1,000. Isn't that nice that the numbers are nice and round? In the real world, they're not going to be nice and round. Anyway, so the first thing we need to do when we prepay this rent is we need to enter it into the journal, also called the general journal. So we need to use the date. That was January 1st. So when we pay $3,000 for this prepaid rent, what is the debit account going to be? Well, because the rent is being prepaid, we have to use the asset account called prepaid rent. And is that asset account increasing or decreasing? It's increasing, so therefore we have to debit prepaid rent. And notice I have a prepaid rent T account. And notice the red box says it's an asset because it is an economic resource as a future benefit. In this case, the future benefit will last 3 months. And don't forget that the A plus in parentheses is just reminding you that prepaid rent is an asset and it's going up. So we're going to debit it $3,000. And notice I have posted that $3,000 debit into prepaid rent, and I put January 1 next to it just to remind me the date of that $3,000. What's the other account that's involved? It's cash. Which way is it going? It's going down. And is that a debit or a credit? It's a credit. So cash, which is an asset going down, will be credited $3,000. Then we need some sort of explanation. What do you think would be a good explanation for this? Well, your explanation should definitely include the number of months that you are purchasing, because if you just look at the debit or credit, you have no way of knowing how many months you're purchasing. So we're going to put prepaid rent for 3 months. And in parentheses, just to help us with a calculation, it's $1,000 per month, just to remind us how much it is per month. All right, so that happened on January 1st. It's now January 31st. XYZ company creates financial statements at the end of every month, so you need to show that 1 month of rent was used up on January 31st. This will require an adjusting entry. Where do we enter adjusting entries? In the general journal. So in the general journal, we have to have the date, so January 31st. Again, we're doing this because they're going to create their financial statements. And before we create financial statements, we have to make sure all the account balances are correct. Look at what the prepaid rent account in the T account shows. It shows that it has a value of $3,000. But does it? No, it should not. That's 3 months worth. It should only show a balance of 2 months worth. So we must lower the prepaid rent by 1 month's worth of rent. So how do I lower that account by 1 month of rent? I'm going to credit it on January 31st by the value of 1 month of rent, which was $1,000. So that is a credit that I'm going to put in the general journal. So I'm going to skip the debit for now, and I'm going to directly go to the credit. And the credit is prepaid rent. A minus is reminding that it's an asset going down, and the credit is $1,000. How did I calculate the $1,000? Because that's 1 month's worth of rent. Now we need a debit of $1,000. So what account is going to show that we used up some rent? It's rent expense. So I'm going to have a T account for rent expense. And I'm going to put $1,000 in the T account. And then for the journal, I also need $1,000. Now some of you might be saying, well, don't we technically put the transaction in the general journal first and then post to the T accounts later? Yes, that's true, but sometimes when we're learning how to do this, we sometimes use the T accounts first. But just realize in the real world, you would enter it into the general journal, and assuming you are using computer software, computer accounting software, it's going to post for you. But you still, when you're using accounting software, you still need to know that the computer is posting it for you and where it posts it to. So now the only thing else we need is we need an explanation for our adjusting entry. And you could say something like, used up 1 of 3 months of rent. So the final thing we need to do, since our boss will eventually ask us to do a financial statement, we need to figure out what the new balance of prepaid rent is. So to do that, you put a line under prepaid rent, and you take the $3,000 minus the $1,000 gives us a balance of $2,000. So on January 31st, also on February 1st, the very next day, we've got 2 months of prepaid rent in the prepaid rent account.